Now we're going to go on to candles and cover a few important points in regards to entering and exiting the market based on candles and how to do it properly. So in the Astro book, there are 10 main candles. You also have one other candlestick formation, which is known as a 3-pin formation or 3-pin pattern, which is in the Astro Effects members area. And we go through it on the face-to-face course as well if you're a UK student. So here we have gold in front of us. This is the daily time frame. Executing with candles only comes forth through the daily time frame, 4-hour time frame, 2-hour time frame, if you're using a 2-hour time frame, or the 1 hour. Best time frames to work with and on are the daily and the 4-hour. So candles. Here we have a breakout of this range on gold. This is the daily time frame. I have all of my key levels on there, a few trend lines. I'm going to take that one off for a moment. Ultimately, on gold, I am looking for new highs to be formed. We have a series of higher lows here. 1, 2, 3, all in confluence with support, and we have support here as well. And it's a third bounce of the trend line, sorry. I'm expecting new highs to be formed past this peak here, 1295.3-ish. So a new high could probably come in at 1300. So I have my key levels. Key levels are very, very, very vital. Key levels are vital. What we need to do first is we need to understand the key levels, which you guys should be well on your way by now. Once we understand the key levels, we can use everything else on top of that foundation going forward. Now, I'm expecting the market to come up to around 1300 per ounce from 1266 at the moment. However, what we have here, we can consider this a bullish engulfing candle. Why? Is because this range in which, if I just show you the 4-hour time frame, let's go lower. Here, this is what it looks like on the 4-hour. So we had a lot of mess. We got some discrete higher lows here, higher low, higher low. But we were ranging. We could use this and utilize this in alignment with the moving averages, which is on one of the other videos, moving average video, went over this same setup. The MAs on the weekly and the daily crossed over. We're looking at trend continuation. Friday's candle, because today's the weekend, while I'm shooting this video, it's Sunday. This was Friday's closure. So it engulfed 1, 2, 3, 4, 5, let's say 6 days. Minimum 5 or 6 days. And what I mean by this engulfment is that we've engulfed and we've taken out and broken through that entire range here. So where the market was accumulating positions, relaxing, so to speak, boom, Friday comes along and we engulf the entire range. So the engulfment tells me the momentum has come back into play from where it was relatively dead over here. We had a few false candles, false signals, here, shooting star with Maribozus. But again, the moving averages on the weekly and the daily were up. So to ensure most of your trade setups work in your favor and we're going in favor of the market itself, we want the moving averages to be crossed in the same direction on the daily and the weekly again. Not all the time do we need that to be in our favor, but it does help, to be honest. So here we've got trend continuation. It's going to be good to see how this plays out. So guys, today's date, Sunday the 28th of May. Sunday the 28th of May. So some people may get this and watch this video 6 months down the line. You can come back to see how this played out afterwards. Anyway, so this is the bullish engulfing formation. If we were to enter at the close of, let's say that was a Monday or Tuesday candle, obviously it's a Friday candle, Friday just gone, but for this example, what we would like to do is entering candlestick formations on a daily time frame, and I'll go over some other setups in a moment. We want to enter around 11 p.m. GMT. So the market's daily close, the daily close of the candlestick is 10 p.m. It's good to just allow the market to find its feet again after resetting the average daily range and allow the spreads to die down a little, because the spreads will widen slightly just past 10. So we come in an hour later at 11, and then we can go ahead and execute. So in this case of this bullish engulfing formation, because it's engulfed the range, remember, a bearish engulfing will be this, where it's engulfed the previous candle body, so 1, 2, engulfment to the downside. This has engulfed this candle, but it's also engulfed the range. So going into the market, from this candlestick in particular, what we want to do, sorry, TradingView have changed their left bar interface, there it is, long position. What we want to do is we want to throw on our risk reward tool. Let's get this out of the way a second. And we're entering at the closure of the candle, which if I line it up, comes in about there. Okay, so that would be the buy. The target, I'm expecting a new high, so I'm going to just target my key level, let's just say 1300-ish, just shy of. Stops, guys, on this formation. So if that's to say it's a standard bullish engulfing, and again, as I went over in the last video, we do have some spike through the MA there, and a mini little spike through the MA right there. I'm looking at this to go long into this region, which is quite an amount of pips away, to be honest, but our stops should be below the formation. So let's just say these two are the formation here, the bullish engulfing. The low of the formation in this case is where we start to calculate our stop distance. So right there, it's 1253. Okay, I don't want to confuse people with the calculations on gold and the quotes on gold if you guys are relatively new, but let's just say this was another currency pair. It would be 15 to 30 pips below the low here. 15 pips to 30 pips below the low. My preference is 25, so we give it that little bit of breathing room. So as you can see, I can just as an example, I'm just going to pull that down 25 pips, and that's how I would do it. I'll give this room to play around, because we could even see this on gold. It could come back, test the EMAs again, come maybe back into the range before going higher. So we want to give it that breathing room. So every single candlestick formation that we trade from, we want to ensure our stop loss placement is always relevant, but we don't want it too large. We want it just so we've got that breathing room, just below the lows or whatever it may be. Example over here would be, we have a shooting star here, shooting star there as well, bearish engulfing over here on the daily. So if you were to go short after the bearish engulfing, that would be your entry. And again, we're using this in alignment with all of our other key technicals. So you do your top-down analysis, you find out the bias of the market, and you trade in the direction of that. So over here, we have bearish engulfing, sorry. So we came up, we have 3 pins as well, 1, 2, 3, then a bearish engulfing. So we go in to the lows and we calculate the high of the formation. So the formation is these two candles. The higher the formation is the wick there on the first one. Okay, so we're calculating 25 pips above that, which again, for example purposes, is around here. And then we can go down to our next target, whether it be this one, to ensure we do have to have a one-to-one risk reward, or again, for our next target there. So we give the market the breathing room it needs, the breathing room necessary, and then that's it. Execute the trade, allow it to breathe, use your targets. Shooting star candlestick over here, even though that is a bearish engulfing because it's engulfed this previous and it's engulfed 1, 2, 3. A shooting star candlestick, we would enter the closure of the shooting star candle, and at the highs, that's again where we would calculate how many pips is our stop loss. 15 to 30, give it that breathing room, targets wherever it's going to be. So that's the current setup over here on gold. So it's always good, guys, to mix it up. I'll go over to the euro in a second, but we want to mix it up. We want to align ourselves with the higher time frame analysis. Focus on targets first and foremost, because target regions are more important than entries. For the reason that without a target in mind as primary, we can't really calculate our risk reward. The entry comes afterwards. The entry can come from lower time frames, daily, 4. Top down comes from monthly, weekly. top down comes from monthly, weekly. Okay, so great risk reward trade there on the euro, on the gold. Sorry, got the breakout. MAs are up. We've got alignment coming in left, right, and center here as well on the lower time frames. So that's about that. Just quickly, I'll go on to the Euro USD, and I'm going to go over to the daily time frame. So, daily time frame, we have over here, we had a huge gap recently on the EU where we broke above our daily resistance, pulled back off the weekly, and let's focus on this little region. Around here. Okay, so we pull back, and we have a 3-pin formation here. 1, 2, 3. With a 3-pin formation once more, we've got the support, the moving averages are up, we've closed back above the moving average, that the body, yeah, as you can see. So it's more like a retest of this region. In and out, in and out. Our setup, our setup goes in, okay, after we calculate where the closure is. So our stop goes, right, the low of the formation is 1.0838. I'm going to do 25 pips below. 25 pips below brings us at 1.0813. That's it, breathing room from here, okay, here to here. So our stop is 116 pips wide on this one, and again we can take it up to the next target being our resistance over here, just as an example. So candle formation 1, 2, 3, stop below on the support. We are looking at targets once more. Again, we want to see where euro can stretch to. In this case, it stretched all the way up to the daily resistance. Now we're consolidating. Okay, now we're consolidating. So again, look for the formation, zoom in, take your time, utilize the entire chart. Zoom in, get clarity on exactly what's going on. Right, so 4 hourly at the moment, the trend is in fact up. There are no candlestick formations as of yet, assisting me to potentially go long. In the situation and in the case of, let's just go back to the daily, just want to make things as clear as possible. So over here as well, we had a spike up on the we closed around 40% of the entire up move here. Next day comes bearish engulfing. Bearish engulfing. The engulfing candle, we could have went short after the day here. The stop would have to go above the formation high, which is here. Okay, and then you can take that back down to whichever level of support is necessary. So I'm just throwing out examples, guys. Throwing out a few examples there on these different currency pairs. So here we have GBP AUD. On GBP AUD over here, on Friday's close, the moving averages are getting very, very close to crossing to the downside. Recently we've had 3 pins, 1, 2, and 3, right through resistance. So the entry on that 3-pin formation, before I get to this one, would have been at the close of the 3rd candle. Stops, you calculate the high of the formation, which is right here, and then you're taking it down to your next key levels of support. Obviously not this one, because it would, that I can tell by eye that risk reward won't add up, but the weekly area of support would have been decent. Next, we have bearish engulfing. So I've just looked at this one now for the week ahead. Again, that's Friday's candle close. The high, as you can see, we've respected our daily region as well. I've took this daily region of 1 to the 3-pin formation over here. It's worked very, very well as support. We broke through that. We've retested it here. We've retested it here with these 2 wicks, and then boom, we have bearish engulfing. Engulf the prior candle. That there is the formation high right here. That's where you would calculate. You would go short after the day close into, I would even go for the monthly area of support. Monthly area of support there. Let me just change. A few updates, SUPP. Okay, so that's that. Bearish engulfing, 3-pin formation. Whichever candle it is, we've got a hammer over here as well, right on the support and straight through the moving averages there. So whichever it may be, so even here in the case of this bullish engulfing, you can see the market's pulled back into weekly support with the black line. We have came back above the moving averages, so here's another setup. We've used both of the moving averages support. We've closed above and beyond, so that's a nice bullish engulfing formation. The low of the formation is this candle right here, taking it 15 to 20 pips lower, and then boom, off into the distance. So guys, that's a little bit about candles. Take your time with each one. Remember to zoom into the chart, utilize the candle formation alongside any of the key levels. Stick to the 15 to 30 pip rule. My preference is 25. And as I've mentioned, daily time frame. Look at the markets around 10:30, 11 p.m. That's GMT time. That's London time, by the way. You have to find out what time that is in your time zone or country or wherever you are in the world watching this video. And always wait for the candle to form. If you're on a lower time frame, just a quick word of advice: the market isn't open at the minute, but on the any time frame below the daily, you will have a timer here. You'll have a bar. Okay, so that's that.